Yo guys, welcome back to Stock Talk Insider. Today I will be talking about SentinelOne, a stock that I founded in the last week. I did some research on it and I'm really intrigued by the company and really interested also. I am planning on maybe starting a little position to start, but I will talk in this video about why I'm so convinced that SentinelOne can be a possible good investment. So yeah, I will not let you guys wait any longer, but first, thanks for the support on the last videos. I would really appreciate it if we can get to around 10 likes at this video. Yes, we begin small and maybe in 1 year I can ask you guys for 200 likes or something, but that would be very nice. And yeah, let's get straight into it. So it's one of the fastest growing cybersecurity companies on the market. We'll cover what the company does in financial growth, its partnerships, valuation, technical analysis, and finally my own price target for 2027 that shows a potential 112% upside from here. So SentinelOne is a cybersecurity platform powered by artificial intelligence. Their core product is autonomous endpoint protection system. In other words, it detects, prevents, and neutralizes cyber threats in real time without needing constant human oversight. This is a huge deal in today's world where threats are becoming more sophisticated every day and where companies are looking for AI-driven solutions instead of traditional manual defense. So a little bit about which customers do they have. So the company already has some very strong customers: Samsung SDS, the IT arm of Samsung, Aston Martin, QT Holdings in FinTech, TGI Fridays, and multiple banks and healthcare institutions and more. So we're not talking about speculative product with no adoption. SentinelOne is already trusted by Fortune 500 companies and has surpassed $1 billion in annual recurring revenue, also called the ARR. As of July 2025. In recent financials, Q2 has delivered this information. So revenue came in at $242 million, up 22% year over year, and they expect to do $256 million in coming quarter. Annual recurring revenue crossed $1 billion, a milestone, growing 24% year over year. Net loss was around minus 72 million, still a loss but improving compared to 90 million a year earlier. Non-GAAP gross margins are over 75%, very strong for a growth company. The company raised its full year revenue outlook from 998 million to 1 billion, showing confidence in continued growth. Now, let's be clear, SentinelOne is not profitable yet. Yes, that's true. That's a risk. Of course, that's always a risk with a company that's not profitable. But there is a but. This is also a very strong growth company with consistent revenue expansion and one that keeps improving quarter by quarter. That's a thing that's been proven. They already deliberately reinvest, just like Amazon did in its early years, to gain market share and strengthen their platform. Over time, that strategy has potential to generate significant shareholder value once net income turns positive. So I do have a comparison ready for you guys. So I want to compare SentinelOne to CrowdStrike, like you can compare AMD to NVIDIA, but purely on its gains on the market and how you can view that, and actually a little bit about where a company can go. Of course, AMD is profitable. It's a whole lot different, but just the idea of how you can look at it, like small brother, big brother type of idea to look at. So now let's address the big comparison, SentinelOne versus CrowdStrike. In terms of product quality, SentinelOne is just as good, if not better, as pure endpoint protection, thanks to its AI-first approach. CrowdStrike, however, has a broader platform with more models and integrations. CrowdStrike also has a much larger market cap and a stronger brand recognition today. Here's how I personally view it together with AMD and NVIDIA. This rivalry reminds me of AMD versus NVIDIA in the stock market. CrowdStrike is like NVIDIA, dominant, established, expensive, and a leader with large market share. SentinelOne is like an AMD, smaller, leaner, and potentially capable of delivering much higher returns if it continues to grow and take market share. So for investors, it means SentinelOne could be the higher risk, higher reward play in cybersecurity going forward. A little bit about why the PE, in my opinion, doesn't matter at this time. Many investors look at PE ratios to value companies, but for SentinelOne, the PE is irrelevant because they're not yet GAAP profitable. Instead, investors should look at revenue growth, which is plus 20 to 25% annually, the ARR expansion past $1 billion, strong gross margins over 75%, and shrinking net losses. So the revenue will keep going up, but they will also keep reinvesting even more. But you will not see it in the revenue going down because revenue will keep going up a lot, and its reinvesting will go like from what is it right now, 5% to 2% in investing. But you need to keep in mind revenue is going higher and investments too. But because revenue is going much higher, their investments will not be seen that much or be feel or you can't feel that much of the investments in the revenue. This is exactly the early playbook we saw with Amazon, Tesla and Netflix. They sacrificed short-term profits to build long-term dominance. I'm not that big of an analyst guy on the technicals, analyzes by the way, on the technicals. But from a chart perspective, looking at it, support is around 17 to 18 at this point. Resistance is around $21 in line with recent analyst price target highs also. If the stock breaks $21, the next zone is 28 and 30, a level we last saw in 2022. The 50-day moving average is crossing above the 200-day, a bullish sign. RSI remains neutral, leaving plenty of room for upside. So technically, SentinelOne is setting up for a potential continuation move to the higher ones. So, going further into its valuation and price forecast, analysts have raised their targets in the range of $21, but I believe the upside is far greater. Based on its growth trajectory, improving margins, and expectation of full profitability within 8 to 12 months, I project SentinelOne to reach $40 by the end of 2027 and probably even more. That's 112.5% upside from here already. So from today's prices, $18.85. By then, SentinelOne should have already delivered multiple profitable quarters, which will dramatically improve how Wall Street values the stock. Now, can SentinelOne return to its all-time highs near 80? It's possible, but more likely a longer-term story, maybe closer to 2030, depending on execution and market adoption. So to summarize it all, SentinelOne is a fast-growing AI-driven cybersecurity company. It's trusted by Fortune 500 companies, which is a big one, and already passed $1 billion in ARR. While not profitable yet, it's improving quarter by quarter and could turn profitable in the next coming 8 to 12 months. In product quality, it's competitive with CrowdStrike, but with much smaller market cap. In my view, this is like we talked about the AMD versus NVIDIA story. CrowdStrike is a safe market leader, but SentinelOne is a challenger with the potential of higher returns. My forecast is $100 by the end of 2027, which is around 112% upside and return. For long-term investors who can tolerate volatility, SentinelOne is one of the most exciting growth plays in cybersecurity right now. And because all of the AI, cybersecurity will be one of the most important investments you can make. And it will be one of the most important topics in all of AI because it all has to be safe. So yeah, if you found this breakdown helpful, make sure to like and subscribe. And then I see you guys later in the coming videos. Thanks for watching.